As you all know, energy has had a rough run in 2019. Really, it's had a rough decade. Still the worst performing sector this year. But what lies ahead? Here's what to watch for in 2020. Stagnant oil prices, heavy corporate debt loads, and environmentally conscious investors selling oil and gas stocks absolutely slammed the energy industry in 2019. All this as the U.S. reached a major milestone, becoming a net exporter of crude and petroleum products for a full month for the first time in 70 years. All this as the race for another kind of element, the so-called rare earth minerals, just began to heat up. Here's what to watch for in energy in 2020. First, a wave of bankruptcies. Unless oil prices rise, the industry and investors may have to endure a number of reorganizations. Many companies are struggling with huge amounts of debt, built up when oil prices were on the rise. And unless oil jumps in price, Wall Street is unlikely to let companies refinance or extend their obligations. Second, international resources shift. Venezuela likely loses control of Citgo. After years of courtroom battles between a hedge fund and the government of Venezuela, the final battle likely comes in 2020. And it's possible the courts ultimately rule against Venezuela, allowing Citgo to be seized, auctioned off, and bought by an American company or companies. And third, the race for rare earth minerals goes full throttle. If you want to build an environmentally sensitive project like an electric car or a wind turbine, you need rare earth elements. These are obscure but incredibly important minerals like lithium, neodymium, and yttrium. China controls most of the world's supplies for these critical elements, but there are many projects in the works to help the U.S. catch up. This will be the battleground to watch in 2020. All right, so let's kick it around here. I mean, that was a great piece.
It was really well.
That was really
Brian,
terrifically
best
written.
Piece of the year.
Well done.
Well said.
Where is energy headed, Dan, in 2020?
It's a tough one. You know, I think crude oil bounced off of 50 a few times over the last 6 months, and obviously that seemed to be a really big technical support level. I look at the major integrateds. I look at Exxon. I think Gina was talking about it last night. It's up 5% off its recent lows. It just can't get going. Chevron can't really get going. The ones you talk about, the ones that risk going bankrupt in 2020, those are the ones that really have moves because of the leverage to the balance sheet. But I think you avoid those. So to me, I look at the integrateds and I say, I don't really see a lot of hope for the equities near term unless you meaningfully get a massive move in crude in 2020.
And you're not going to get a massive. I think the expectation for crude is so far beyond what it's capable of, because you hear, oh, OPEC's cutting production. This is going to be great. But if you look, you also see demand has been slowing as well, which means production cuts have to be like a lot bigger than they're going to be. I think that we're going to end up disappointing.
But just remember, when OPEC, they cut production, but Saudis were cutting more than their quota. If they actually went back to their quota level, in some ways they could produce more.
Yeah,
there's sort of a trick of math there.
Right,
it's a little bit confusing, but that's all you need to know.
Saudis cut 130%.
Yeah, we have the biggest oil field in the world get bombed 2 months ago, and oil barely budged.
Yeah.
Not even a blip.
So I don't think oil is going to get meaningfully past 60, 65. And I think this XLE move getting above that 200-day moving average is very tempting to pick a bottom here. But if you look at oil prices, I don't see this thing moving higher. I think the only place that makes some sense are some of the oil names that have reduced their leverage, like Enbridge. Those are the only names that I'm
interested in. You're talking about midstream. Now you're talking about pipelines.
Exactly.
And pipelines are a different beast.
Right.
Hey, Christian, any view on the MLPs?
Yeah, I mean, I was just going to go there with the MLPs. We saw a nice bullish divergence a couple weeks back, so they've really rallied off the lows. We've seen a lot of bullish option activity. That would be one space that I would look at. The yield, you look at the AMLP ETF is about 9%, so you can get a nice yield there. But I agree with what you guys are saying. It's bounced. Now you got the heavy lifting. XLE at the 200-day moving average. Now is really where they're going to have to prove themselves. I like the material space a little bit better. Technically, it's breaking out. I think it's a better looking trade.
I talked to a hedge fund manager. He liked Enterprise Transfer. I think he was long Enterprise Transfer, short Kinder Morgan. Effectively the same company, but because Kinder Morgan was in the S&P 500, he felt the valuations were above where they should be because it's being bought by all the ETFs and all the people buying the SPY. And he's like, I like to look for the oil and gas stocks like the ETPs, Enterprise Transfer, that are not represented in these major indexes.
But I think the leverage comment is absolutely right. That's what killed a lot of the MLPs, is they were just destroyed by their leverage. Right, and so I think that's been sort of one of the bigger ways of differentiating.
Yeah, according to my math, I've run spreadsheets from Capital IQ data, $646 billion in debt, gross debt for the industry on $71 billion in net income.
That's still going to be a problem going forward, and I think this, if anything, is a potential opportunity to sell XLE.
Okay, sell the XLE. All right, speaking of energy, nobody likes it, but there's been so much to talk about with Netflix being the best stock of the decade. So we asked you, can you name the worst performing S&P 500 stock over the last 10 years? Some of you got it. It's an energy name, Apache. It's down 75% from the beginning of the decade. It has lost over 70% of its market cap since then, almost $26 billion in market value. Remember, there have been worse stocks, but this is one that's been in the index. This was the stock, Gina, that we did the return to sender stock. You said you wish you could have returned this one.
Absolutely. Unfortunately, we have a very robust energy portfolio, so we get all shapes and sizes. This one we think is just a broken company. If you look at every metric, you look at return on equity, return on assets, they're just not efficiently running the company, and they're disappointing. We're having major disappointments. They're drilling off of Suriname has so far showed a dry hole, and they're saying, hey, we're going to keep doing it. We're going to keep doing the same thing, but somehow it's going to be different, and we don't think so.
Okay, Apache, the honor of being the dog of the decade.